What's happening the 10th of January? And we're coming off of some really interesting news. But before we get into that, if you're seeing this, you're one of the few because you subscribed. We've got this window where you just hadn't seen me. It's not because I wasn't trying to be seen. It's because when you're transferring stuff from one mortgage company to the next and changing firms, it's a significant pain in the ass, especially this marketing piece. It's amazing how the marketing, branding, all that kind of crap, unbelievable. Unbelievable. You talk about the amount of regulation we've got, the amount of oversight, the amount of just everything that, makes it difficult for us to get information out. So if it looks like I'm not even out there, I'm out there. Just text me 602-291-3357. You can get me. The aaronchapman.com website's not doing its thing that it should be doing right now. I'm trying to get that fixed. Hopefully later today I'll have the guys in here to get that done. But everything takes time, especially when you're talking about regulation. And you're talking about being compliant, you're talking about licensing, all that kind of crap. It's just the way life is. But so what are we talking about today? Ooh, market's something. Market's definitely something. Let's take a look at what non-farm payrolls did. Payrolls really, really, really got out of hand because there's some future people are looking towards, right? It's like, hey, there might be some stuff happening here in the near future. So that being the case, there's a lot of folks here that getting jobs. They thought, just with the ADP numbers coming out earlier this week, there was some belief that, wait a minute, we might see something funky happening. Plus, yesterday you had a day where the stock market didn't trade. So coming into it was all day trading yesterday in the bonds. So coming into an open market day for the stocks, there's bound to be some movement into stock market from bonds. So that's going to have a negative effect on bonds. Then we start going into the jobless claims. Well, there was the payrolls. So there was anticipation of 165,000 jobs coming in. Before it was, 154,000 jobs, but that was actually it's 212,000 jobs is revised from 227. So that had a drop. Well, they forecasted 165,000 jobs because they thought things continued to decline, but we actually had 256,000 new jobs come in. Now, that happened after election. So there could have been, because this was the December reading, there could easily have been because of how people felt after November hit. What's the market going to look like? So that being the situation, there's a lot of positive feelings towards that. Now, what is that going to do for us as far as rates are concerned? Well, the Fed, right, they cut rates as it has to do with inflation. If inflation's going up, they have to raise rates. If inflation is going down, they're going to be cutting it. Well, it was trending, according to their data, that it was trending downward. But that's not what we've been seeing. Every time they've cut, we've seen interest rates jump. Why? Because that's an inflationary move. It was actually causing more inflation, people moving more capital, more money, or more activity in the economy. And now you have this, more jobs. That's going to create more activity in the economy. Now we have what? We're going to monster construction out in California. How long it's going to take, who knows? I mean, we know what the bureaucratic bullshit is out there for a building permit. Can you imagine what's going to be trying to get that place rebuilt? So if we thought we had housing issues before, we thought we had housing inflation before, monster housing inflation. But where's that capital going to come from, especially if you had a lot of insurance policies that were canceled as a result of those errors? There's a lot of interesting things going to happen as a result of this. So I don't think the Fed's going to keep lowering interest rates. It's going to pause on that, hopefully get some inflation under control. We are in an inflationary environment. We do have a lot of confidence in the private sector with what we have happening in the with the new administration. We're also going to have monster job loss because they're going to be cutting things out of the government if they fulfill exactly what they said they're going to fulfill. It's going to be an interesting time to be alive. So what did that happen? What happened with the bond market as a result of all this? Let's take a quick peek. So we've been bouncing in this area here. We'd held this channel, if you will, kind of a sideways thing, broad range, 99 to 81 to 98, 17. So you're, somewhere in the range of about 60 some odd basis point swing in here. So that being in the mid 50s, so that's about 0.5% in movement in the cost of the rate. So if you're being offered a specific rate, it would move somewhere in the range of about 0.5 to 0.6% in cost for that same rate at any given time during this window of time. Well, now we've fallen out of that as a result of this jobs report. So inflationary news, meaning a lot more money going out there, people will be spending money. We're going to see that impact here. Now, it could also be traders a lot of these things has to do with the emotion of the trader. So they're going to be getting into stocks real quick because of this jobs report, and it might calm down. But we're also going into a weekend, so we may not see any sort of rebound till next week. So it's possible we could rebound and come back in here. As we can see, down in this area is below where we are right now. This is the line that's showing that. This is all the trading there. So we might see some sideways playing in there and then back up into these again, back up here. So I'm not saying lock, I'm not saying float. I'm just saying this is where we sit, and I have no idea where that bottom happens to be because all this is unexpected information. Everything is changing all the time. Who could have predicted not just a wildfire, but something that tore through so much of the housing out in Southern California? There's a lot of things that are going on in the market that's hard to predict. The amount of capital that's being taken is still being sent overseas before the actual full balls transfer of power. That also is creating a significant amount of inflation. Why? Because there's that much capital still being thrown out into the ether. It's not a matter of cost of things. It's a matter of the supply of things. We'll get into that probably in the next month. Maybe I'll get into that supply scenario and how that impacts inflation, how it impacts the dollar's ability to buy. So for right now, that's where we sit. Tuesday, hopefully, we'll have these things up so I can blast out the entire database like we had in the past. Appreciate you guys.